back to Unfoolish Investing, everybody. Rough day in the market, right? DeepSeek, semiconductors, AI stocks, even the energy sector collapsed. Absolutely collapsed. But you know what? We're in it for the long term. Double down, double down, double down. ASML, buying Taiwan Semi with these pullbacks. Great chance to get in. Why? Overreaction. Fear. No numbers have come out to show that anything negative will be impacted. So keep on buying ASML. Keep on buying Taiwan Semi. They're coming back. They're coming stronger. But for right now, today's episode, we're jumping into SoFi Technologies. I promised you I'd cover it, and here we are. The latest earnings report, breaking down the key metrics, discussing what they mean for us unfoolish investors. So, SoFi reported adjusted earnings today per share of 5 cents for the fourth quarter. And you know what? That's not bad. Expectations came in better than expected. We were supposed to get 4 cents. We got 5 cents, surpassing the analysts' expectations. This represents a positive earnings surprise of 36.35%. Additionally, the company achieved adjusted net revenue of $739 million. Repeat, adjusted net revenue of $739 million, exceeding the anticipated $675 million by 8.34%. What happened? Why? Membership growth. The company added 785,000 new members in this quarter, bringing its total membership to over 10.1 million. 10.1 million. This growth reflects SoFi's expanding presence in the financial services sector. I'm looking for the negative market. I'm looking for the negative. SoFi's lending segment saw origination volumes increase by 66% year over year. Personal loans were up 63%. Student loans increased by 71%. And home loans surged. Home loans by 87%. This robust growth underscores the company's strengthening position in its lending market. And I'm not sure if you're a SoFi member, but if you're not, I can attribute I am getting hit nonstop with that marketing, and I'm loving it. I'm not buying it because I don't need it, but I'm loving the marketing because it's reflecting in the numbers. The financial services and technology platform segments contributed a record 49% to adjusted net revenue. 49%. That's up what? 40% from the previous year. 40. This diversification highlights SoFi's strategic expansion beyond traditional lending. Let me repeat that. This diversification highlights SoFi's strategic expansion beyond traditional lending. Now, market reaction. The futures. Despite the strong results, SoFi stock experienced an 11% decline. I saw it coming. I mentioned it the other day on my short. SoFi has retreated every time they report earnings, it's almost a guarantee lately that they retreat. Closing at $15.98. Maybe a little bit higher right now, after hours to $16.08. Downturn was attributed to conservative future guidance. This is what we call management trying to set expectations for the upcoming year. For Q1 2025, SoFi projects adjusted net revenue between $725 million and $745 million, and earnings per share of 3 cents, both slightly below Wall Street expectations But let's pause on this for a second. Let's come over here. December 24, we beat the EPS by 36, beat revenue by 8.3. September 24, beat by 15% on the EPS and revenue beat by 8.7%. June of 24, they beat by 60% on the EPS and beat by 5.3% on revenue. I could continue to go quarter after quarter. So I see the mention of these conservative numbers for future guidance as them looking at the overall market, looking at the economic situation that's out there, looking at inflation and saying, you know what? We may not reach your expectations. But if I look at every other time that they've done this, they always blow by it. And until Anthony Noto doesn't blow by it, like his consistency and track record has shown, I'm buying in. I'm going to continue to buy in at these levels. Why? I love the pullback. We needed the pullback. It's been a phenomenal run. If you bought in November of last year when we told you to buy, you'd be up, maybe a little bit under 100% right now. If you bought 6 months ago when we were talking about buying, what would that have looked like? I think you're probably going to be up somewhere around 120. Yeah, 119%, roughly 120%. SoFi's been on a tear, right? For the full year, the company anticipates revenue for 2025 coming in at 3.2 to 3.27 billion. And earnings per share ranging from 0.25 to 0.27. Analysts had an expected revenue of 3.02 billion and earnings of 0.28. CEO Anthony Noto noted that these projections do not account for 2025 tax obligations, which may affect their earnings per share. All I can say is SoFi's latest earnings report showcases significant growth and strategic diversification in the company. While the market reacted cautiously to the company's future guidance, SoFi's expanding membership base, robust performance across its segments suggests a promising path forward. As always, Unfoolish investors should consider both the opportunities and the risks when evaluating SoFi's potential in their portfolios. But for me, as a long-term Unfoolish investor, I'm buying. I'm buying down. If it continues to go down, I'll continue to add. And I'm going to continue to add as it goes up. Because when I see the end of 2025 and the way the economy is going right now, unless something tragic happens, I see SoFi coming in somewhere between $25 to $30 a share. $25 to $30 a share. That's it for this time. Thanks for tuning in to Unfoolish Investing. Stay informed, stay prudent, happy investing, stay unfoolish.